Okay, it's Wednesday, February 22nd. This is a pre-opening SPY report, about 45 minutes to go before the open. After a big red bar yesterday, we are still expecting price to continue lower. Although anything's possible, did we possibly just broaden out below this area here and we can start strongly above the midpoint of yesterday's bar and above what's now the pre-market high and head up? Anything's possible, but you're not really anticipating that. And as long as you kind of stay below the halfway point of this bar, and as long as you kind of stay below the open of the week, then in some form or another, you're expecting price to head lower. Today could be a little tricky because I think you have Fed minutes in the afternoon, so maybe you're not going to get that strong directional move right out of the gates to have a big red bar and then another big red bar, that type of thing. But given that we're kind of bouncing around here pre-market, hopefully near the highs of the session, maybe we'll fail up there and at least get a morning move to kind of at least take out yesterday's low a little bit, and then maybe you won't get the strong directional move, but enough for a nice base hit type of trade early. Although again, it's always possible you do continue lower. Again, as long as we stay below, more to me, the midpoint of this bar and especially the open of the week, then you're just going to be biased to the downside. But sometimes on a downward move, you get pauses along the way. You head down a little bit early and then you just go sideways the rest of the day. Sometimes you gap big down and then you have a day where it kind of just, you stay down on the day, but it sort of never really follows through after the morning. We're not in that mode right now. We're not gapping below that, but we'll be biased to the downside. Again, the target here, if this weekly open, holds, is down towards this area here, the low of this bar, which is in the 393 area, I believe. And once we hit that, we then get a, situation where the monthly chart fails on the two up and gets to the halfway point of the prior month. So this could be, again, we're running out of time in the month, but if we have a really weak, another day, down day, and we take that out, you never know. We could be looking to project down to those lows of January, in a kind of a end of the month, kind of a big move down. But we'll see if that develops as well. So anyway, the buys is to the downside. We're just going to kind of watch the pre-market range as always. Ideally, I'd almost like to see a failure to the upside here first and then start lower, or you kind of get kind of choppiness in here for 4 or 5 bars in the first and then start lower. That would be a great trade. If you start lower out of the gates, kind of expect the lows of yesterday to be taken out and maybe this pre-market low, but don't be surprised if you don't get that strong follow through, given we have some afternoon news. Also, I think some earnings are still coming out, maybe not today, Nvidia or something, that might really have a influence on the market in the day or two ahead. So, keep the buys to the downside, but we're just going to have to follow price action to see if we can really get down to that red line. And it could happen today. I mean, there's no reason why, if as long as we don't really head up, that we can't get continuous red bars to the downside if price action leads us there. So let's just see what happens. But, at least to take out yesterday's low, and then you can set up kind of no risk trades at that point, see if you can get deeper follow through today as well. But I think with those Fed minutes in the afternoon, the market might be waiting, a little bit before making some big directional move. So we'll find out.